Hi guys, welcome back to the Market Monitor. Today was a wild day, so let's get right into it. Before we start, I just want to address the fact that for the next 2 weeks, from next Monday till the end of the trading session of the next week, which would be Friday, I wouldn't be posting any Market Monitor videos. I'll still be active on Twitter, etc., but I won't be able to post any YouTube videos. And luckily for us, it seems like the market is not going to be doing anything crazy in the next 2 weeks either. So let's get into it. Now, today was a very important day. In yesterday's video, as a lot of y'all would have heard, I said that today is going to be a make or break day, right? And why do I say this? It was very obvious. So we are evidently seeing that the small cap index has been taking support from the 5-day up until the day of 11th June, right? Now suddenly on 12th June, you break the 5-day moving average and now you're taking support from the 10-day, which is all right. Ideally, what should have happened is that you pause here, and I've said this before as well, you pause here, you give another inside day, and then you continue your up move, right? Like you keep continuing that up move. However, unfortunately, that is not what took place. What happened later is that we broke the 10-day moving average as well, but showed positive signs and took a lot of support from the 20-day. Closed strong, which is a very good sign. The next day, now we can see that the volatility was evidently increasing. We almost made an outside day on the 16th of June, which is never good, right? Even though we closed super strong over the 10-day, on the 17th of June, it was clear that we should have moved upward. But instead, we moved again and closed below the 10-day moving average. On the 18th of June, we provided another tight range, which was a very dull day for the markets. And now the reason that you're at a make or break on the 18th of June is because you are taking support from the 20-day, but you're rejecting the 10-day. And now this is very crucial. So today, either the market was going to go up or the market was going to go down, or given inside day, and the Friday would be make or break. But today the market has decided to break down. And now we're looking at another down leg probably. Considering simple Dow theory, it is very evident that the market is down, up, and today you've made a new low. So this is very clearly now a new down leg, right? And this is never nice. You don't want to see that in the market. Now what is happening from here, we might take support from the 200-day and the 50-day slowly catches up, and then maybe somewhere around the 1st of July, etc., we see the start of a new move. However, it's going to take time. Now, what I would like to see is the market continues to consolidate in these areas, right? And then now take your time, take your sweet time, let the setups form, and then let's get into the next leg. Don't be hasty, because as hasty we will be over here, the quicker the market is going to fall again, right? The quicker you go up, the quicker you're going to fall again. So you always want to, I've explained this as well, you always want to go up, take a pause, right? And your equity curve should do this, the market should do this, stocks should do this. The concept is this simple. You do this, and then you keep moving upward. The moment you start running from here all the way till here, you're basically bound to fall quite deep. Now that fall might be till here, it might be till here, it might be till here, you don't know. But the odds of success reduce, and in the markets, all we're playing are as odds. So now that the small cap index has been discussed, let's look at some other indexes as well. Okay, Nifty again, like I've been saying, Nifty just confuses me, man, to be very honest, because we have a base here and now we're in this range again. We're range bound in Nifty, which is tough. I don't know how exactly you want to even analyze this, because you're basically range bound, right? Till the time you don't break these levels of 24,460 and you don't break these levels of 25,200, you're not going to actually get any sort of action. So it's going to be very difficult to even understand what's going to take place over here. But that's Nifty. If we look at the S&P, right? Okay, so this is decent. What about NASDAQ? Okay, cool. So NASDAQ is quite chill as well. It doesn't seem to be very broken down, but the DJI is not that good. But anyway, we are more focused on the CNX small cap, so let's keep to that. Yeah, so the market's going to be falling now. I don't expect there to be any action for at least the next weeks, like the next coming week or so. and it would be best to stay in cash as well. Don't risk hard-earned money, hard-earned gains in this entire process, because it's not worth it, right? Look at this entire down leg over here. This entire down leg, except for this November December rally, it was super difficult to make money, because every time you're coming up for like 3-4 days. On the third or fourth day, a setup gets formed, and by the time you're entering the setup and the setup gives that breakout, you're already down onto the next leg. So it's not worth it. You just take your time off, let the market reset itself, and yeah, we should see action starting from July first week, or maybe second week, or god knows, maybe December. You don't know the markets, you never know, right? Very easy for the market to just correct completely till here, and then you get another up move. But we hope for the best and we follow what the market tells us, and that's exactly what we're going to do. Anyway, moving on now from the small cap index. Today I took a trade in Paras, and the reason being that the defense space in general, right? So the Nifty India Defense, this is the defense index. This was showing very, very strong moves. So before this breakdown that took place, you were making an inside day. If I can draw it for you guys, that would be easier. Right, so it was basically making sort of this inside day, and it was ready to either break out or just stay inside or break down again. So this is what was happening in the Nifty India Defense ETF, or index, sorry, not ETF, and it was looking quite good. And more defense as well. I had an alert set here as well, just to maybe trade the ETF itself, not all of the sectors, not all of the stocks in the defense space. So I can just play that through the ETF. Even GRSE was looking quite good. This is still looking decent, to be honest, but now I don't see any sort of possibility to even consider a trade, because the markets are not good, and we follow a very simple system here: environment over sector over setup. Anyway, Centum was also looking pretty good. Apollo was decent. So there were a lot of setups getting formed, right? Data Patterns was also doing well, and I had alerts set. Sika had already led this entire defense rally, or whatever you want to, the space, the 2-3 day move that came, right? You already moved 20%. Solar Industries, nothing at HLB. Okay, yeah. So the idea was that stocks were already doing decent, and that's the reason why I tried Paras. I tried Paras in a very small 5% position, as I said. The idea is to take a tester always and see if the position works or doesn't work. Now the position was up at least, I think, 1 or 2%, right, which is nothing, and then you sit right back down. So I got out at a 2% stop, but my impact on portfolio was only 0.15%, which is nothing, right? That's like 1/4 of an actual trade. So the idea is that when your impact is so low, it doesn't really affect you, and on top of that, you're taking it out of your profit cushion. It's not going from the capital. So that's the beauty of managing gains and managing risk. When you understand the symphony between the two of these, it becomes so much more easier to do trading. So that was the entire idea behind Paras. I wanted to play the defense sector, but I also wanted to make sure that I'm entering at a very low risk point. So I tried to enter over here. I missed this entry, and then on the 5-minute chart, if I show you, I entered at these levels above this high. So yeah, my position was up 2.5% at max, and then I got out on this big red candle. But the idea was simple for me. The idea was just that I wanted to ensure my capital is not taking a beating. And the best way to do that is to take a small position size when you're not too sure about how things can pan out. Imagine I take a 25% position size at these levels, right? And then I get hit with a 2% stop. That's really going to impact my portfolio. But you only take those 25% positions when you know that the environment, the sector, and the setup are all in your favor. So that's the entire thought process behind Paras. There's no issues over here. It's a normal trade for me. I'm just going to add it to my FY26 trades. And yeah, stop loss hit, we're out. And now we're probably going to be sitting out for quite some time in the stock market. Nothing to do. Time to, develop other facets of your life, other holistic areas, how you can become an individual who's well-rounded, not just stock market oriented. How do you become someone who goes to the gym and does it well? How do you become someone who plays a sport and does it well? How do you become a reader who reads books and does it well? The idea is to be consistent in all facets of your life, not just one. So now that the stock market is going to take a break again, it seems, for at least a week. We don't know. It could be back in the next 3 days, but I'm assuming a week. it's time to sort of dive into other aspects of life, right? Try to get those things sorted as well. That would be my sort of 2 cents on what you should do. But apart from that, I would say, yeah, just take care. Have a good couple of weeks, because I won't be on YouTube for some time now. I'll be there on Twitter as well. But apart from that, I would say, is there anything else I want to discuss? I just want to make sure I'm not missing anything out. Q Power, Bellrise. Yeah, all of these are quite weak now. Auto. So everything's just broken down. Oh, look at this. Look at everything is just broken down. Like, this is not a market to be involved in. You just want to stay out. When you can't find one setup, that just tells you that there's no need to even think of being part of a market like this. If you're going to trade in the next couple of days, then all the best to you. But yeah, I'm going to be out for sure. So it's time to sit on cash, do nothing. Yeah, man, this market's gone now for some time, at least. So again, thank you so much. I'll see you all next time, which should be after a couple of weeks. And hopefully by that time, we'll be on for another rally and things will get juicy again. Thank you so much.